You've probably noticed that the word cryptocurrency is starting to appear again, whether it's in mainstream media, on social media, it might be that friend that you're talking to at the water cooler at work. It's definitely making its way back into that mainstream media. Whether it's Bitcoin, Ethereum, or Dogecoin, you're probably hearing all of these different terms and now people are going, oh, maybe I should invest in them. Well, if you're going to do that, you really need to understand how the tax works on it. So today I'm going to share with you how the tax works on cryptocurrencies in Australia and some of the pitfalls that you need to watch out for so that you make your tax time much simpler. Anyway, let's get into the video. Hello everyone, my name is Ethan Rushock, and on today's episode, I'm going to be talking to you about tax on cryptocurrency in Australia. As I said in that intro, cryptocurrency is hitting mainstream media again. The price of Bitcoin has been rising, and when the price of Bitcoin rises, it seems to make its way back into mainstream media. People are talking about it, and therefore more people are investing in it. It's definitely something you need to be careful though when it comes to tax. It's going to be taxed potentially, so you need to understand how it works and what record keeping you need to do to make sure it's not an absolute mess for you. I've seen some real horror stories when it comes to cryptocurrency and tax. So I've had people come to me and they've got no records whatsoever and they've been unable to construct the records and therefore I've been unable to help them. I've also seen situations where people have sold assets and not really understood how the tax works on it and therefore have actually lost money overall, but due to the timing of their sales, actually owe a lot of money in capital gains. So there's ways that they could have avoided this if they'd had a better understanding of how the tax system works and timed some of these sales better. And because a lot of people are selling coins for coins and there's a lot of altcoins out there, it's not just Bitcoin, they're trading and they're doing a lot of different things, the record keeping can get really messy. So you need to have an understanding of what records you need to keep so that when it comes to actually working out what capital gains you've made, etc., it's really simple then. Alright, so first I want to quickly go about how tax works on cryptocurrencies in Australia. So pretty much it'll be treated almost the same way as shares. So you are likely going to buy an asset, in this case it's going to be a coin, so you might buy Bitcoin, and then when you sell that asset, you'll likely have a capital gain or a capital loss on it. So it can be as simple as that, but the thing you've got to remember, it's not just when you sell that asset back to Australian dollars, it's every time you trade that asset. So if you buy Bitcoin with Australian dollars, that'll get you a base value. But if you now go and buy Ethereum with that Bitcoin, for instance, that is going to be another trade and you've got to convert all those transactions back to Australian dollars to work out whether there's a capital gain or capital loss on each transaction. Now look, it can get more complex than that. Luckily there's the ATO website here, which I'll provide a link to in the description, because that's really good on having some real good examples of different situations that might apply to you and how they would be taxed. So it's going to be a bit like shares, is there's going to be people that are investors that are looking for a long-term gain or loss, but you also might be a trader where you're trading daily and therefore you're going to be taxed slightly differently. Now there's not going to be dividends as such with a lot of coins, but there are some coins that pay income. So again, this is another area that you need to look into because you'll have to pay tax on that income that you're receiving like you would with a dividend or interest. So that's going to be added onto your taxable income and therefore you're going to pay tax on it. So like I said, it's pretty simple. It's going to be very similar to shares. So you're going to have capital gains or losses. You need to make sure that's on every transaction, not just when you're converting back to Australian dollars. And therefore you need to convert every transaction into Australian dollars to be able to work out what the Australian dollar capital gain or capital loss is. Now the good thing with this is because it's capital gains, it's going to be treated like normal capital gains. So you're potentially going to have discounts if you hold for over 12 months. Or if you've got capital losses, you can offset them against other capital gains. So if you think of it, each coin is going to be like buying a share and treat it in the same way as that. So I'll link you to the video where I've gone into tax on shares because it's going to be very similar to that. So make sure you check that video out if you want a more detailed description of how this works. So I want to go through a couple of ways that you could track this to make it easier for you. So you could obviously keep a spreadsheet. So whether it's on Excel or Google Sheets, keep a spreadsheet of all your buys, all your sells, work out each gain on or loss on each transaction, and therefore add those up, keep a track of which ones are over 12 months, etc. And you better work out your capital gains or capital losses. This could get a bit complex if you're making a lot of different trades or if you've got a combination of under 12 months, over 12 months when it comes to discounts or exchange rates, etc. So you really want to make sure that your spreadsheet is set up well fundamentally so that it doesn't make a nightmare at the end of the year for you. The other option is that if you're, say, using ShareSite, which I've talked about before when it comes to normal shares, is that can also track certain cryptocurrencies. It's limited by the ones that it can do, but it will do your major ones like your Bitcoin or your Ethereum. So if you're already using ShareSite, this will probably be a great way because it's going to lump all of these crypto transactions in with your other shares, and it's going to make it really easy for you to report on your total investment holdings at the end of the year. So definitely have a look into that if you're using ShareSite. I've got a link down in my description to ShareSite. So make sure if you want to make it really simple, go through there, sign up and keep track of them from day one because it'll make your life much simpler. The other option is actually a website here called Coin Tracking. So I've actually used that in the past and it's obviously built for cryptocurrencies and it's really detailed. It's got a lot of exchanges on there where you can track on returns by exchange, by coin, by date, and you can pull out a lot of different reports. So it goes beyond just tracking it for tax wise. Now keep in mind, some of this tax stuff is set up for overseas markets as well, but you can make sure that you set it up in a way that will work for the Australian market as well. But it is a really good detailed site. Like I said, I've actually used it in the past and found it really good. I've also found it a great way to track how my portfolio is performing when it comes to my cryptocurrency assets. So it doesn't really matter which one of these methods you do, but make sure you do at least one method. Keep all your source documents, etc. through your exchanges, but make sure you're collating it into a simple way so that when it comes to calculating these things at tax time, it's much easier for you because you don't want to be paying someone to do all this for you and it costing you a fortune because that's just going to eat into the returns you're making off your assets. Now I just want to go through a couple other things that are common misconceptions when it comes to tax and crypto. So one of the things is that people go, oh, it's a decentralized economy, no one's going to know, the ATO will never find out, but this isn't true. A lot of the Australian exchanges, for instance, you have to provide know your customer things when you sign up for these. And I've seen it on pre-filling reports that I get that shows a client's income, etc. And it shows on there that this client may have disposed of cryptocurrencies. So the ATO are definitely becoming much more aware of people's dealings in cryptocurrencies. So the reality is if you've got income from any source, whether it's employment, whether it's from investing or cryptocurrencies, you should be declaring it. It's not worth the risk. You're going to get caught out likely because these data matching things are getting better and better from the ATO. So like I said, they're now aware of who is exchanging cryptocurrencies, and therefore, if you don't include it, you're going to be flagged potentially for an audit. Now, the other thing I want to touch on, there is a way that potentially that you won't have to pay tax on cryptocurrencies, but that's only if you're using them as a currency in day-to-day life. So for instance, if you were using Bitcoin to go purchase other things for your business or whether it's individually, then you may not be an investor or a trader if you can show that you're actually holding it as a personal use asset, not investing for a long-term gain. Now, obviously that gets a little bit complex, but it should be simple if you think of it, well, what am I actually using this for? If I'm transacting in Bitcoin to buy goods or services, then it is likely that you are using it for a personal use. But if you're buying it with the intention that you're hoping it goes up in value, then you're definitely an investor and you're going to have to go back through what I've just talked about and pay capital gains on it if you make a gain or record that capital loss. So you really need to have a good understanding before you go and invest in cryptocurrencies on how you're going to be taxed on them because it's such a complex area if you don't get it right early on. It can be more complex with shares due to people are trading between coins and there's a lot of stuff in foreign currencies as well. But if you get it right from the start, keep the record keeping, you can keep it simple. And as always, make sure you understand what you're investing in general, because if you don't understand what you're investing in, that's when you're going to lose money likely. Make sure you get the tax side of it right, and make sure you check out more videos on my channel. Hit that like button, hit that subscribe button, and I'll see you on the next video.